I mean, when I saw it, my interpretation was not this is like a serious piece of analytical research. It could, because obviously you could say that for any asset. Um, but it's sort of more a response to the increased involvement of retail investors. Like we've mentioned before on this podcast, an article written in the FT about 12 and 13-year-olds in the school playgrounds trading crypto on their mum's credit cards or whatever it is. There are some pretty insane ends of the speculative frenzy with crypto, to do with how unregulated certain aspects of it are. And that it's not the only place where speculation is happening by any stretch, but I just wonder whether it's more them sort of saying you can lose money, because in that article there was a quote of a 13-year-old saying, what would you do if Bitcoin went down? And they said, oh, well, it's fine, because every time it goes down, it always comes back up and goes higher. And just that sort of incredibly ingrained by the dip mentality, which has come also from like equity markets, right? We see the buy the dip mentality so powerfully in equity markets as well, and bond markets too. But that this is more, it's not a sort of serious thing. It's more of a sort of, don't forget that you can lose money. Like, don't risk, it's shorthand for don't risk more than you can afford to lose. Would that be fair, do you think?
Welcome to the Exponential Investor Podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Hello and welcome to the Exponential Investor Podcast. I'm Kit Winder, and as always, I'm joined by Sam Volkring. Sam, are you feeling better now?
Yeah, certainly on the mend. Healthy bout of the flu. For anyone concerned about it being COVID related, it wasn't. Multiple tests proved so, but fit and fighting back, almost back to full strength.
Okay, good. Well, I'm glad you're feeling better. Now, there's been a fair bit going on while you've been away. One of the things that has been struggling is the crypto markets and the tech markets, which gives us, as always, a lot to talk about. And this week, I suppose I was wondering, whether this latest trouble is something serious for Bitcoin. And certainly one institution thinks so, because the Bank of England has issued a warning that Bitcoin could go to zero. And I've never seen anything like this before in my whole life. That a major financial institution has warned about crypto going to zero, and I just wondered what you make of this incredible new prediction from a central bank.
Yeah, look, the Bank of England's a weird beast, right? I mean, I find it really interesting that the Bank of England wants to come out and talk about the crypto markets when previously they've said it's not really a great risk, it's not a great systemic risk. They've more or less said, we're not that bothered by it. And yet at the same time, they also come out and say that it could go to zero and that investors should expect to lose all their money. And yet all of this, while they're pushing this narrative that they want to introduce a central bank-backed digital currency, that they want to get into the digital currency space and issue digital currencies to people. And yet all of this as well with the backdrop of soaring inflation, which this week we saw, I think it was at 5.5%, might even be higher here in the UK. The numbers that you see are actually usually not as bad as the actual numbers really are. So inflation is soaring, which means that the value of a pound in your bank account is eroding. So while their dirty fiat money is decreasing in its value and does so over the long term, they come out and warn people about losing all their money if they move into the crypto markets. And I guess I shouldn't expect any different, right? I mean, it'd be like when email first came along, Royal Mail saying, email's great. Go on email. Yay for email. We shouldn't really expect any different. I just think what they're doing is actually irresponsible, because they're not. They always bang on, and the regulators bang on about providing, the right information and helping people to understand risks. All they're doing is just pushing out these really quite, this lack of knowledge really that they're showing is that, this could all go to zero. Well, to say that is just ridiculous, and it shows their position really. It shows their hand. So, I guess they've got vested interest in keeping, their monetary policy going. they've got a vested interest in trying to justify their own existence. And they talk about trust, but trust in the traditional system continues to erode. So it's frustrating because a lot of people then look and think, well, these guys must know what they're talking about because they're central bankers. It's like, well, they know maybe a thing or two about the traditional financial system, but they're really making comment on things that they do not fundamentally understand.
Would it be fair to say though that I mean, when I saw it, my interpretation was not this is like a serious piece of analytical research. You know, it could, because obviously you could say that for any asset, but it's sort of more a response to the increased involvement of retail investors. Like we've mentioned before on this podcast, an article written in the FT about 12 and 13-year-olds in the school playgrounds trading crypto on their mum's credit cards or whatever it is. There are some pretty insane ends of the speculative frenzy with crypto, to do with how unregulated certain aspects of it are, and that it's not the only place where speculation is happening by any stretch. But I just wonder whether it's more them sort of saying you can lose money, because in that article there was a quote of a 13-year-old saying, what would you do if Bitcoin went down? And they said, oh, well, it's fine, because every time it goes down, it always comes back up and goes higher. And just that sort of incredibly ingrained by the dip mentality, which has come also from like equity markets, right? We see the buy the dip mentality so powerfully in equity markets as well, and bond markets too. But that this is more, it's not a sort of serious thing. It's more of a sort of, don't forget that you can lose money. Like, don't risk, it's shorthand for don't risk more than you can afford to lose in that way. Would that be fair, do you think?
I see where you're coming from, but if they're trying to say, you should, take, educated risks in your investments, they should say that, not just focus in on, your Bitcoin could be worthless. I think what they're doing is really they're shooting themselves in the foot as well, right? So a lot of people are just like, well, what do you know? Over the last decade, if you look at the long view, then yeah, okay, kind of in the crypto markets, number does go up. And yeah, look, there's some irresponsible practices. There are 13-year-olds trading. So what? Who cares if 13-year-olds trading? I think that they make the problem out to be considerably bigger than it actually is. If there's a 13-year-old that all of a sudden has become interested in investing or in the markets or in trading, okay, it might not necessarily be the most ideal gateway in, but it's a damn sight better than a lot of other things they might be looking and spending their time on, even if it's just playing Call of Duty or something like that. I mean, I've got nothing against Call of Duty, but we need to find a way to help educate people in a responsible and serious way about what is really, it's not a gambling market. This is a serious global market with serious institutions, serious organizations, serious long-term potential behind it. And they come out and just throw out this flippant, could be worthless, Bitcoin could be worthless. I just think that they put themselves on this pedestal of being an authority and being a place of trust and quality information. And then they go and spiel off some kind of crap like that. I think it really just shows that probably they don't care about anything really other than their own self-serving policies, trying to justify their own existence and the mistakes that they've made for the last 12 or 13 years now. If they want to pass comment about markets, they should maybe start thinking about passing comment about how they said that inflation is just going to be, a minor, impact on things. It's not going to be, it's going to be just, here and it'll disappear. When in reality, the cost of living for a lot of people is skyrocketing at a time when, life's pretty tough. So I just think the central bank, the Bank of England, kind of should stick their nose somewhere else. Rather than pushing people away from a market that there is a lot of opportunity in, and that people can actually build wealth in outside of traditional financial measures, and anyone that sort of denies that that's a reality is ignorant. And I find the comments, typically the comments that come out of the Bank of England, are incredibly ignorant when it comes to the crypto markets. They just see someone got scammed, or they just see something got hacked, or they just see a volatility in a price of fiat money. and that's it. It's puddle depth knowledge, really, and that's a shame because I think there's a lot of people across the UK that want to know more and should know more about how this market works, the catalysts that really push it forward, the development of technology that we're seeing unroll in front of our very eyes, and how that's going to, help drive innovation. It's going to help drive growth in the UK. It's going to provide jobs. There's a lot of benefits that this comes. And then when they come out and say Bitcoins could be worthless, it's ignorant, the way I take it, at least.
I mean, it is interesting because obviously the people who work at the Bank of England, or it would be true in the Federal Reserve as well, or any central bank really, they're going to be sort of brilliant, well-educated, ambitious, thoughtful people in so many ways. And I'm sure they could talk us off the table about the bond markets, the functioning of monetary policy, like certain aspects of the economy. So I suppose the question is not, that they're ignorant or they're stupid or anything like that. They're sort of clearly very serious and brilliant people. It's more what I suppose I find interesting, what I'd be keen to hear your thoughts on it, is how sort of the collective behavior of organizations just sort of drives a rejection of challenges and disruption. And I would see the same in oil industries, which just, they have this sort of groupthink that builds up and creates a culture that it then sort of steamrolls on, and it just sort of can't really tolerate or accept sort of a challenger like Bitcoin or renewable energy. And you see this sort of through history, really, where institutions, they can't get outside of their own bubble. It's a sort of story as old as time, really. Is that what you're seeing here, rather than just sort of somehow, the least intelligent of our nation have made it to the highest echelons of the Bank of England?
Yeah, look, I'm not saying they're not intelligent people. I'm saying stay in your lane, and I just don't think that this is a lane that they should be talking about unless they can prove some sort of base understanding of what is actually happening. Sure, like you say, they know a lot about stuff, and I'm sure they're very good at modeling things and doing other stuff related to whatever it is that they do. And no one wants to be replaced. No one wants a challenge to the very livelihood that puts food on their own table. If an AI writer decides to get into investment research and our position and our jobs are threatened, I'm not going to like it either. But at the same time, you've kind of got to accept and look at what is happening and the future that's coming, and maybe look to find a way that you can adapt to it, live with it, or if it's going to basically put you out on your ass, look to do something else, or at least get on board. So, I mean, I don't know. Yeah, I'm sure there's plenty of smart people there. I'm actually sure there's plenty of absolute nimwits as well that have just become the dumbest people, made it to the highest of office through various means. So it's a mix, but it's a mix like that everywhere. It's not isolated to the Bank of England. Like I say, I think they just need to stick to their lane. And like I say, the crypto market is a market that is new. It is still relatively new in the scheme of things. It's challenging to traditionalists. It makes people think about investment, trust, data, how people interact, how society even functions, really. There's a lot of levels and nuances to it. And so it's just, these flippant remarks, and it's just as bad from the Fed and senators in the US. Senator Elizabeth Warren came out and was talking about DeFi and how it's, a fundamental risk to everything, basically. And again, it's puddle deep knowledge, really, of what's happening, and doesn't look at the bigger, broader issues of why it even exists. Trust in the financial system, trust in these centralized positions of power, which is eroding at rapid knots because people are having to, as I say, spend 10-20% more in a year on bills and goods and food and petrol and all these kinds of things. It's harder for people to live day to day than it was a year ago. And what's happening is, you're seeing these concentrations of wealth move to the fringes. So look, there's a lot of things happening in society, in politics, in the financial system, in the crypto markets, which is, really brewing and bubbling and opens up a lot of opportunity for things to be done better. And that's what the crypto market really does. It opens up a huge wealth of opportunity for investors. if you can get that knowledge under your belt, that foundational knowledge about what is coming and how it's going to push the market forward, you see stuff from the central bank and you just dismiss it because it's ridiculous. And, I think it's as simple as that.
Yeah, I mean, you're absolutely right to say it's so important to go deeper. And I think, my point about the collective behavior within institutions is something that sort of I can sort of feel and recognize in myself sometimes. There's that quote, it's not what you don't know that kills you, it's what you know that just ain't so. And it's that thing where when you sort of build an understanding of something and you think you know about it, I have encountered this very resistance myself, like with cryptocurrency, where I find it easier for my own view of the world to sort of reject that new thing or what's coming. But then when you do sort of force yourself outside your comfort zone to like look at the challenges and imagine that what you think currently might not be exactly as you think, it's a sort of psychologically challenging thing. But I have found it very worthwhile. We hosted the Crypto Summit last summer. I spent a lot of time talking to you and working with you and reading all of your work, Sam. And I've found it very, I guess, rewarding, pushing myself slightly outside of that comfort zone to find out more about DeFi, which, I'll happily admit I knew very little about, not just a few months ago, and all the other things that you talk about and with Burrs as well. So yeah, I encourage people to, I guess, push yourself outside of your comfort zone and sort of just find out more things about it. And obviously you did that a long time ago and understand more than the rest of us combined.
Yeah, I mean, I just wish that some of these policymakers and decision makers from the Bank of England or the Fed or the Reserve Bank or wherever they're from or in government did that, took the time to understand more before just throwing away these kinds of remarks that, can be considerably damaging because, a handful of people might look at that and go, oh, yes, I'm going to steer well away from this. And that's a shame because I think that to dismiss the crypto markets and the development and innovation happening in this space and to dismiss it from an investment perspective and just to dismiss it from a sort of global shift in how we communicate and transact, just day-to-day operations, day-to-day lives. People dismissed the telephone, they dismissed the internet, they dismissed apps and smartphones. And these are integral parts of our day-to-day lives. And I think the same mistake is being made today around blockchain networks, decentralized systems, cryptocurrencies. And it's a shame because I think a lot of people will miss out. But those that are smart enough or have their eyes open and want to learn more can do so. We do our best to provide information and resources on that. We've got, a briefing live at the moment about one of what I call the backbone of what crypto networks can become, and some of the massive changes coming to that in 2022. That briefing is live now. I think there'll be a link somewhere for people to access that so that they can learn and understand and figure out how this market really works. But as I say, it'll be for people that, have an eye on the future, an open mind, aren't dismissive of things that might challenge their fundamental views on everything, and want to learn more. And once you breach that knowledge gap and learn more, I don't think there's any turning back. So, it's an exciting time. There's good, there's bad, there's ugly, as there is in any market. Crypto is not the answer to everything. I'm not saying that it is, but at the same time, if you're getting your crypto information from the Bank of England, like I say, you've kind of got to question their interesting position, especially around, as I say, the fact that they all want to push pretty hard for a central bank digital currency as well. It's just an interesting take, I suppose, from something you would expect the Bank of England to say.
Well, Sam, yeah, as always, it's always great to hear your views on these kind of things. Nice to discuss the central banks as ever and potential threats to them. But for now, I think that's all we've got time for. This is probably maybe our last regular podcast before the end of the year, but there is going to be maybe an end of year review or a Christmas themed podcast. We've got some things coming up, so stay tuned and look out for those. And yeah, as Sam said, there is a briefing live. I've seen it and it's really good. So I highly encourage you to go and find it if you're interested by the kind of things we're talking about today and what he calls, the backbone of the crypto industry. So go check that out and bye for now.